that golden hook that basically says, if I stay here and I go through and I build this practice, then what are things that you can do that will provide that golden handcuff, that enticement? I mean, it can be a future amount down the road. It can be a strategically designed where maybe we're going to pay for your child's college down the road if you stay with our practice for 15 years. And of course, then so that's the promise. That's the promise. Now the question now is, now that you basically have a liability on the books, now the question is how do you fund it to keep your accounting and everybody happy? So then how do you fund it? You know, with different types of side accounts. One of the common products that are used are different types of insurance companies. Banks use them, corporate companies use them. You know, your largest corporations use it. We're basically using different types of insurance policies that are, you know, heavily overfunded and provide the liquidity there. Also provides some tax advantages to the corporation. Also provides cash reserves for the corporation. So if there needs to be a new operatory built, you know, there's money set aside for this future promise, but it can also be used in the business. And basically your promise is put together with, you know, possibly Andrew with the legal ramifications, the promise, and then the funding is set aside in order to offset that. And it makes the employee very happy knowing that, you know, if you're going to pay for my kid's college, you know, 10 years down the road or 15 years down the road, you know, it's nice that the employee understands there's a side account that's being funded for those funds are going to be there. Life for a lot of situations works very well. I mean, we're always going to look at what's the amount in their operating account. You know, there's some docs that are totally happy having $50,000 in an operating account and they think that's enough. And there's a lot of docs that like to have $150,000, $200,000. And, you know, I think there's a point where, of course, you have too much in an operating account. I think that can cause other potential problems when too much of the staff sees, you know, $250,000, $300,000 sitting in an operating account. We don't think that's a good use of money either.
Right.
But
you're missing
yeah. But there's, you know, exactly. But I mean, I guess one of the questions that you're asking out, where does insurance play for a lot of people? And what we're finding is, in the business owner circle, which of course for most dentist practices they are, having control of funds is very critical. To go through what I refer to as the metamorphosis of a dental practice, like you showed earlier, you know, the beginning to the end. I mean, it's amazing the things that come up that require funds as they grow. And there's no doubt about it, what you said. For 99% of the dentists, the very best investment they can make is in their practice. Unfortunately, traditional financial planning says, now that you're making some money, put all your money with the financial institutions, whether it's the 401k or the profit sharing plan or, you know, different investment accounts. And what you have to look at is, how does that tie up the money? And unfortunately, a lot of times people have money tied up that they now want to use to do that next operatory, to do that next location. And so where we use the life insurance as a ways to basically do a total, what we call maximum overfunded policies. There's an amount that the government will allow you to put in from an overfunding standpoint, and it truly provides the liquidity and access to funds, tax strategies when you need the money, how to write off loan interest if used properly, that allows, that is a very good, what we call holding account. Some people call it launching pad for other opportunities. You know, if someone needs life insurance, they need life insurance. And so if, you know, what I usually recommend, it's usually 10 to 15 times income. Okay. It doesn't matter if it's whole life or term, it doesn't matter. The key is, you know, I always like to ask people if you were, if you were to get killed, how much money would you want to be, replaced? And if your income is $200,000, how do you replace that $200,000? And it's not rocket science. You got to, so 10 to 15 times income is pretty common.